I don't know if you know that feeling, sometimes you introduce two friends and you just know they're going to hit it off. I'm feeling a bit like that today. I think I've been to 28 plenaries of the ECBC before now. I spend a lot of time in Central and Eastern Europe, and finally they're together, finally the first ever plenary in the CE country. So it's a great day, so thank you very much to the ECBC for agreeing, listening to the pleading and coming here today. Now, traditionally at these plenaries, we have a panel where we review the covered bond market in the host country, talk about what the issues are. We can't really do that so much here because, well, as of yet, we don't have a covered bond market to talk about. But we'd like to talk about more general pictures of covered bonds and covered bonds in the context of the overall development. To help me do this, we have the panel that you see before you. Representing the three, you can see the names also. Representing the three countries, we have, where should we start? Start with Latvia, Minister Šapoka, the Finance Minister of Latvia, who was also previously responsible for market supervision at the central bank. Ints Dalderis, who is an advisor to Minister Ruhe and a former minister here in Latvia, and Märten, who is the Deputy Secretary General of the Ministry of Finance and has actually been very involved in this process. And then representing the markets, Kerli Gabriloviča, who is the head of Luminor in Latvia and a member of the management board of Luminor Bank, and Charlotte, who you've just heard, so needs no further introduction though. Charlotte, I did notice in your bio that you have responsibility for 18 countries now. Is that the stage where it's easier to list the countries you're not responsible for? So thank you all very much for joining today. Now, one of the things that I've learnt working closely with the EBRD is cover bonds cannot be seen in isolation. And listening to Mr. Dombrovskis' speech last night, he spoke a lot about Capital Markets Union, an initiative when banks were pretty poorly, perhaps driven by the problems in some of the Western European countries, to replace an over-reliance on the banking system with the capital markets. But then I come here and I look at the countries and I look at the banking systems and I look at loan deposit ratios in these countries and I see a very healthy banking system. So, Minister, can I start with you by asking, does this region really need Capital Markets Union?
Good morning, everyone. So let me start with the very beginning. From the very beginning, when we restored our independence, and almost for 30 years we are talking about the creation of liquid, well-capitalized capital markets. And sometimes we do forget what's the main purpose. It is to finance the economy. And you are very right to say that we have very effective banking systems. According to various figures, our banking system is one of the best, not only in the EU, but in the whole world. But why this doesn't help to our economies? So the main reason is that at this stage of our development, we need risk takers. And banks are very conservative investors, and thanks God that they act in this way. We need risk takers, we need innovations, we need additional push for productivity growth in our economies. We need better capital allocation in our economies. And in this respect, you cannot do just with the help of universal banking system. Banks are very good in financing traditional business, and we need unicorns, we need fast-growing companies, we need access to exports channels. We need risky, crazy ideas in order to help our economies to grow. And without capital markets, it doesn't seem possible, at least in a short term, or in a medium term, and in the long term as well.
We need these risk takers. Now, I did ask the question in the context of general capital markets, not the covered bond market, but lots of people in the covered bond market, risk. It's very, very risk-averse culture here. Specifically, Märten, can I ask you on the funding side of this question for the covered bond aspects? Very high loan-to-deposit ratios in Estonia, throughout the region. What do you see as the benefits of a covered bond framework more specifically?
Well, partly returning to the previous question that why in this context we're talking about capital markets union altogether, I would totally agree with Minister's basic point. Maybe just adding that why we are a bit wary of the present structure is, of course, that even if during the last cycle and crisis the banking sector survived actually very well and preserved financial stability during the crisis as well, then still looking forward, the diversity but also resilience of the financial system is not necessarily yet there. That's why we shouldn't put all the baskets into one, or all eggs into one basket. And this is also question, I think, in terms of narrower question of covered bonds that in order to improve the diversification of the funding sources, also for these banks alone, we seem to be missing something. Frankly speaking, I'm not the biggest fan of covered bonds. Sorry for that here, but
it's good to be open.
but it's definitely important element in the system and could be adding to the diversity of the system. And I would actually say that in this CMU context, it's also a funny question that actually covered bonds, is it more about capital markets or is it about banking system? Because it is linking capital markets to the banking intermediation. So that's the main issue, that at least not to limit the market with the restrictions in the legislative side, and thereby at least create the basics for the diversified funding sources as well.
The topic of the, is it about the capital markets or is it about the bank, is something I'd like to ask Charlotte about in the context of the Vienna initiative in a moment. Before I do, though, I think it would be nice to just explore why you're not the biggest fan of covered bonds, what the specific concerns that you have are, and whether we can address them.
Well, as I put it, I'm not. I wouldn't overemphasize covered bonds in the overall universe of capital markets. That's maybe the specification of my statement. Partly because, as you all know, the covered bonds is one way of arranging the financing in this sector. Whether it limits also other parts of the great market is eternal discussion. Academically, I don't continue.
And it's noticeable that in Latvia and Lithuania, the covered bond initiative is parallel with the securitization discussion as well, which addresses some of the more restrictive aspects of the covered bond and its usefulness. But Charlotte, can I come to you and ask, let's be negative, okay? So 10 years ago, more than 10 years ago, it was not such a nice market here. The Vienna initiative was, I think, set up partly in response to that. What do you see from the EBRD, the role of these regional capital markets in the context of the objectives of the Vienna initiative?
Can you hear me? Thank you, Richard. Well, first of all, for those who aren't familiar, the Vienna Initiative was set up by EBRD and other IFIs together with home and host regulators and financial institutions working across Central and Southeast Europe, effectively invested in those countries to avoid chaotic deleveraging, which was a real risk when the financial crisis hit in 2009. It was effective. We had a full forum 10-year anniversary meeting in Vienna last month where everybody reflected on the success of this work, which was really about also trust between the individual parties, which was very much a question of people working together, trusting each other, and that helped to create trust in the market institutions to enable a smoother work in managing this eventual deleveraging by the local banks, improving their local funding base, etc. And this is where, of course, instruments like the covered bonds become very important because they enable the local institutions to fund themselves, improving their resilience, reducing their dependence on cross-border money provided by parent institutions. So following that first success of the Vienna Initiative, in 2012, in response to concerns in the Eurozone, particularly on the non-performing loans, they did further work which was branded Vienna 2. And in part of that, it was also focused on expanding the work on the Capital Markets Union. So after the CMU Action Plan was adopted in September 2015 by the European Commission, we created in the Vienna Initiative a working group on the Capital Markets Union to promote diversification of investment finance in the region. I mean, this is a region where the capital markets comprise 1/3 of the investment finance in those economies compared to the role of non-bank finance in the rest of Europe. So there's tremendous room to grow the role of capital markets in the countries that were previously socialist economies. In fact, our work through the Vienna Initiative has then produced a report in June 2018. We have outlined ways to improve the resilience and to further develop the capital markets. And the report was specifically referenced by the European Commission in their midterm review of the Capital Markets Union Action Plan. So we continue this work together with the Structural Reform Support Service, which has been a great supporter of our work, particularly here in the Baltic states, but also in Poland and Romania and other countries. And we will continue to work on this. But it's, you know, the thing is that it's not just about banks when we talk about what we need to do. The covered bonds are a really important part of it, but it's also on the side of creating demand by having the savers who need to invest. And so second pillar pension funds are very important, developing the insurance market, because these are the people who invest long-term, or the institutions who need to invest long-term, and they're the buyers of the covered bonds in many cases. Thank you.
Thanks, Charlotte. And Ints, I know if you want to comment on just the situation here in Latvia in terms of why you're introducing the covered bond framework here.
Yes, thank you. Take my apologize for being late. Unfortunately, we had some other events. Now it's very tough days today. And regarding covered bonds in Latvia, I don't know exactly what was said before, but of course we see in Latvia it's a great opportunity actually for our banking system as complementary for the encouraging new funds. And I think the Ministry of Finance and the experts of our three countries working very closely together. I don't know, but you know that in November 2017 was signed agreement, memorandum of understanding about the regional capital market development in our countries, and we see that it's a good opportunity, and we are working very closely for that. And all this, it's very good that the directive of European Parliament is now adopted, and I think everything is going very well in that way. And of course, our law about the covered bonds in Latvia. Now we are working very closely in Ministry of Finance, and then we think in this autumn it should be passed to government.
Thank you. And Kerli, can I turn to you? It's no secret that Luminor has been very interested in this process, has been watching it closely, and you're a sponsor of this event. Thank you. And we see your logo all over the city. But I think for people who aren't so familiar with the Baltics, it's a new name. Could you perhaps just give a quick summary of the rationale behind the creation of Luminor and what it thinks about its funding going forward?
Thank you, Richard. Yes, indeed, Luminor is very interested in development of different funding options, and that's actually also very connected to the way of our strategy on how Luminor was created. So, for those who are not from the region, there are two banks who were decided to merge their operations. It's DNB and Nordea. The operations in Baltic states, and as a result of that, in October 2017, Luminor was created, and our target is to, from the funding point of view, to become independent, to be independent from the parent bank's funding. So we are intending to be a regular issuer in both also senior markets, in the capital markets, and looking for different let's say opportunities and options of funding, right? So diversifying our funding portfolio. And as of such, I would say what is maybe we also unique in a sense that we are the biggest player who is clearly local. So if you look actually at the Baltic markets, so the banking markets, then majority of, let's say, market share actually belongs to so-called Swedish banks. And then we are one truly Baltic market that is a bank here who is trying to be independent.
And you're, to some extent, you still have some funding from your former parent groups outstanding?
Yes, we do have, of course, but we, as was also mentioned before, we have issued already bonds. We active there, and we are definitely looking forward and targeting being also in the covered bond market, being ready to issue the bonds as soon as legislation steps in force in Estonia, which is expected this October. Then, and initially, yes, we're looking for the Estonian issuance, but we are very, very much actually hoping and waiting for the Baltic pool, and we're actually, in that sense, very happy that this Baltic initiative is taking place.
Can I ask, and I don't know who wants to take this question, anyone, very basic question. What defines these three countries as being the Pan-Baltic? Is it because of similar size, because similar stage in development? Why isn't Poland part of the Pan-Baltic market? It used to be part of Lithuania.
So, since Lithuania is the biggest country in Baltics...
That means you can go first.
No, so, of course, it's, I think, a foundation is that we have a lot of common things in our history. And of course, our geopolitical situation is also very similar. Our countries are brothers and sisters, although we compete. But if we join our efforts, and a very good example is covered bonds, we can achieve more. Just pooling those assets, we employ invention, which is well known for for many years. We not only can achieve a critical mass to be interesting for institutional investors, but it is also about risk reduction. So we cannot rely just on the financing from deposits, because in normal times, okay, it is a reliable source, but in volatility times, then it becomes quite dangerous. Therefore, diversification of sources of funding, I think it's very important. And coming back to your question, I think common history, similar stage of the development of our economies, similar challenges, and of course the same banking groups, I think that's the answer.
Okay. A specific example, for example, NASDAQ operates on a combined basis between the three countries, but the Warsaw Stock Exchange is much larger and more liquid. Isn't there a temptation to list there rather than NASDAQ, for example?
Of course, some companies can use that opportunity, but it is also about symbols. If we want our economies to look similar to Scandinavian ones, of course, on many occasions, we try to copy the models which are already in place. And this is why we have NASDAQ, Pan-Baltic operator, and why we didn't choose to join, as you said, Warsaw Stock Exchange. It is about risk profile, it is about the goals we want to achieve, and it is a symbol for institutional investors as well.
If I can go back to Luminor and ask about this point of the similarities. So you're an Estonian bank operating in all three countries after a complicated rearrangement of the legal entities, but decided to be an Estonian bank operating through branches rather than subsidiaries. On a practical basis, how difficult is that? Just the day-to-day things of three different supervisory regimes, three different legal structures, trying to do a mortgage cross-border?
Well, yes, I can say we've become, let's say, branch structure as of 1st of January this year, so it's very new for us, but the target, yes, was actually to make the governance so much easier and simpler, and we can already see how much easy it is now. I mean, just as a simple, me as a manager, I had to be in 4 different risk committees, 4 different supervisory councils, 3 different management boards, and basically we're doing the same decisions, right? As we were trying to run our operations Pan-Baltic anyway. So that's, I would say, the biggest difference from the governance side, that it became so much more easier. Right now, I would say we are stepping even more further. I think we are running now our operations more Pan-Baltically than our competitors. And the reason for this is scale. And because the countries are small, and in order to be able to provide the better services at the efficient price and cost, it's very important to be actually operating on Baltic scale. What we see that yes, there are cultural differences across the countries, there are some legislation differences, but from the point of view of what are the needs of customers, both business and household customers, actually very, very similar.
The needs of people for a home loan is the same, but then the supervisory framework or the legal framework is different.
Yeah.
What efforts are there to try to overcome that from a supervisory perspective? Märten?
Well, obviously, here we should take into the picture already the banking union of Europe, where much of the supervisory effort is already centralized. Although, of course, one could continue to dispute whether this is optimally arranged and built up in our system, or should there be some further improvements. So in that context, one should really look at only Estonian or Baltic markets alone. It's now getting closer and closer to European supervisory framework. And in that context, it is actually a good question why you would like to see separately Pan-Baltic initiative. What is, of course, we shouldn't, let's say, counter ourselves to European efforts to improve the functioning of the single market in general. I would rather say that the Baltic specifics is now related to our size. Also the development stage, but you could also say that in some sense we might serve as a microcosm for the single market, that if we don't manage to generate the functioning single market inside these three relatively small markets, then how we can actually dream of single market in Europe.
So I'll just elaborate on your very best point about if we cannot, how come we can create capital markets union? So I think in this case we can be an example that, look, capital markets union, it's not about just a list of legislative proposals, it can work in practice. And I think if Baltic states are successful in developing covered bonds market, I think it's just a first step. We have also other good examples. For example, just to mention a common fund for innovations, Baltic Innovations Fund. So I think those joint initiatives can clearly signalize for the European Union that if we stop arguing on just for the purpose of arguing and join our efforts, we can achieve more. As it was said by you, if you want to be fast, be alone, but if you want to go further, you should go together.
I guess one of the ways that it makes it easier to work together is that you don't have a huge history. When you're working on the directive, we had a vast Danish lobby and a vast French lobby and a vast German lobby with all of their history. Now, Charlotte, you mentioned in your speech a couple of specific deals in equities and bonds, but generally, how much capital markets activity is there?
Well, what I'd like to say on that is this capital markets union in the Baltic states is important for overcoming the constraints of the small markets. And we work in Slovenia. In Slovenia, the market is just too small on its own to offer an adequate supply to attract investors, for example, for an instrument like covered bonds. So obviously, bringing together of these three relatively small markets to create a market that has a more substantial size is very, very interesting from an investor's perspective. And of course, we were able to build on the work already done under the NASDAQ Baltic market. So you have joint listings, you have the common standards, you have harmonized indices, single membership. All of these things facilitate investors' access to the Baltic listed financial instruments through any member's exchange. Within the MOU then, the three Baltic states agreed to work together on the design and implementation of the measures, including establishment and improvement of the underlying legal framework, so as to introduce new instruments, for example, the covered bonds. We have worked on this together using the resources of the EU's SRSS to lay the foundations of the Union, including the framework for the Pan-Baltic covered bond. And we have a number of other projects underway. We already had our conference in London to launch this in October last year. Minister attended. We are working in Estonia on the creation of a regulatory sandbox for fintech. We are working on the development of the legal and regulatory framework for hedging instruments here in Latvia, and on a review of the environment for institutional investors in Lithuania. So these things also contribute.
Okay, then if I can just ask the three countries in turn then to reflect on that and the specifics of why the capital market isn't so much developed and what you'd like to see from the Memorandum of Understanding. Who'd like to answer first?
So I think Memorandum of Understanding is gentleman's or gentlewoman's agreement to seek for the same goals. Three countries, we struggle in finding new sources of finance for businesses, and joint efforts can help in this respect. As it was mentioned, that for institutional investors, in many cases, you should reach a critical mass, critical scale. For example, if we talk about business angels, so that critical mass is quite small. But when we talk about institutional investors, if you cannot reach a few hundred million euros, then you have nothing to propose. So this is why in those cases we should cooperate, because our goals are the same.
Märten or Ints, anything specific that you'd like to see from the MOU?
I would maybe add that, and this goes beyond this conference main topic, that interesting things happen in capital markets, let's say, outside the traditional regulatory narrow space. There is, and this is actually, to my understanding, also working reasonably well regionally. What I mean is, let's say, this less formal capital intermediation, things like crowdfunding, etc., etc. What raises the question, obviously, that why is it so that we see today, one step back, I'm not concerned about big boys or girls. There the capital markets function already cross-border pretty well. I'm not concerned at all that, for instance, Luminor is listing its funds somewhere in, I don't even know where in Europe, and doesn't show up in our statistics. So what's the concern? But the efficiency of capital markets go beyond these bigger players, SME shape, etc., or layer, etc. That's a bigger concern. And the interesting thing there exactly is that why actually market seems to be accepting more risk outside the, let's say, core regulatory space, let's say this way. Are they fools? And they will be taught at some point that this all was a stupid game? Or is it so that we are missing with these structures and the cost structure, for instance, is still too heavy and prohibitive to capital intermediation? And in that context, obviously also it's actually one way to work on is to have this economies of scale through the cross-border infrastructures, etc. At least not prohibited by legislative, for instance, unnecessary constraints. Some of my colleagues recall that actually, if you look in broader sense, then Baltics not having a capital markets union is a historic nonsense, because we, at least with Latvians, we had the same legislative basis, at least starting from 13th century. I don't know, of course, the rules of the capital markets were a bit different at the time, but at least the basics of the civil law and these things actually basically were the same for a long period of time. So not having the single market is actually quite a short period of time. So.
Does anyone want to respond to that? I love it when we get all historical. Okay, this is a covered bond event, and we're talking about the general capital markets. It's time just to focus on the covered bond initiative. So, who would like to just give an overview of what the overall objective of the covered bond, Pan-Baltic covered bond framework is? What do you want from it? What the challenges are? Who wants to?
So I can start by saying that, as I previously mentioned, that our banks, their base financing is deposits, which are, for a large extent, term deposits, but you can withdraw that money at any time. Of course, statistics works and people usually do not do that, but you cannot rely in the long run, you cannot rely just on this basis of financing. And additional source of financing, pooling the resources of 3 countries, as I said previously, in order to reach the sufficient scale for institutional investors, is a good step forward. And it also clearly can be additional color in the financial world, additional flag on the map of the financial world. And if you are just Lithuania, Latvia, or just Estonia, for you even to be a little spot on that map is quite difficult. And if you look through the eyes of institutional investors, they see Baltics as one region. So I think sometimes we are not happy that investors do not see differences between our countries. But if you look to that situation and employ that weakness, I think you can become stronger. And we cannot lose and we cannot miss this opportunity. I think it's a good step forward.
In very practical terms, Kerli, if I can say it, you're our customer here, and Charlotte, you're the guiding hand behind it. What's going to define whether this is a successful process?
Yeah, I think it's very important that if we're talking about cover bonds now, so yes, as I said before, we are very much supportive on the Baltic pool, and what that means that the assets have to be able to be cross-border transfer with no additional costs, right? And that means some changes to the statutory legislation and I understand that the legal analysis shows that Latvian and Lithuanian legislation needs to be changed so that the seniority of the claim would be let's say, respected also in the local legislation. So I would say this is one of the keys, because, and of course, we're also looking at the 500 million euro issuance size at least, because that's, again, better liquidity, so to say, brackets for the investors, and also brings the cost down. Yeah, so, and if we would have to, let's say, have 3 different pools, then imagine 3 different ratings, again, 3 times making analysis for the institutional investors as well, and also that would just make it much more difficult to actually make those good big pools. And if I actually now looking at the smaller players, I think that's as well for them. So we are one of the biggest in the mortgage in the Baltics, but then if you look at the next players who would potentially also want to, let's say, issue some covered bonds, they would be that's better off if they can combine those pools because they're just simply smaller.
Maybe just to say, from our point of view, if you look back 5 years from now and wanted to say, was this successful, then it's really about, is it really a Pan-Baltic pool? And are we attracting investors of a scale that wouldn't be able to invest in the individual markets? I think those are the two things. And if they're met, then I would say we will have met with success with this project.
Okay. Anything from a country perspective to add?
Maybe I can add just a few remarks. About the challenges, I think this is a good sign because they're talking about covered bonds, Pan-Baltic system. I think it's very good that our financial industry associations from all our countries are supporting this, and we have just really demand from the market players, from banks, that we need such things. And as part of public administration, Minister of Finance are ready actually to work very closely with players and just to serve everything they need, and to just encourage the not really developed capital market.
Also, if we come back to the real economy, having an additional financial instrument for institutional investors, as you mentioned, the second pillar pension funds. Now, a huge proportion of those investments are going just out from the country. Of course, it is the main purpose is risk reduction, diversification, but to some extent, of course, we can use home bias investments to boost our economies as well. And I think in this respect, this new financial instrument can help. Of course, to some extent.
Okay, I think we've just got a couple of minutes left. We touched on quite a lot of topics, both cover bond specific and more general about the capital markets. Does anybody in the audience have any questions for the panel or any comments or observations on what we've said? I can't really see. Yes. Sorry, I could just about see. Yes. So inevitably we get into the detail. I don't know if anyone wants to talk about, could we? So if I understand correctly, the question was, do we actually need a law in each of the three countries, or can we just have a law in one country? Estonia has a law already that can then take assets from the other countries. Was that, am I in? Yeah. Both reaching for the mic at the same time.
I'm not a lawyer, but of course everything is possible. But of course, it has costs, and I think harmonized legal system can help to reduce those costs. And even now, there are no major obstacles to issue such kind of an instrument. But of course, costs are just too high. So, and the main purpose is to reduce the level of costs of the issuance to a bearable level.
You'd say that it could, but it wouldn't be optimal.
No.
Yeah. Märten?
The same. I would say that strictly speaking, I think you could think that how to say, we introduced the covered bond law, and Latvia and Lithuania just confirmed that they support it legislatively, but I don't think it's at the end of the day politically feasible.
From the customer point of view, I think it is important, just simply operational issue-wise as well. So, for example, where your treasury is located, right? So it's more convenient for you to maybe then issue the bonds in the country where your treasury is located. So having this legislation just in one country would just mean that it is a bit more difficult process-wise, given that the legislation is otherwise adjusted. So I would say that is probably having it in all three countries would make it just the option much more wide, and so that actually players or customers who are in the market actually can choose where they want to issue.
Taking off my moderator's hat and answering the question myself, I think that's one of the two key points is, yes, it's very, very difficult for a bank whose treasury is in one country to use a covered bond law in another jurisdiction, if only because of conflicts of supervisors, for example. And I think the other thing is, and it comes back to your point about the costs, there are so many little details within the law that you need to change, and the best law possible in Estonia can't do anything to address the problems of the Latvian land registry or Lithuanian bailiffs and what they have to obey. And I think facilitating what is needed on a practical basis to structure it, yeah, you do need each of the individual laws not just to be able to work in its own right, but also to facilitate efficiency for the other two laws, and that's a major part of the process. We have another question at the back. Frank. Really difficult with these lights.
Yeah, I'm a small guy, sometimes it's difficult to find me. Now, I think one question, when do we can expect the first Pan-Baltic covered bond? This year or next year? I know a difficult question, but a little bit of guidance.
Spot the banker looking for a mandate.
As I mentioned, we are targeting to be ready. So there's a lot of homework to do actually for the banks as well. So IT infrastructure, we are in the process already. We are in the process in being ready by the end of the year to issue first cover bonds. So it's meaning, yes, getting ratings, getting IT infrastructure in place, and the pool evaluation and things like that. So hopefully at the end of this year.
And I suppose one question is, which is going to be the critical path? Is it the issuers or the law? And then obviously the Estonian law is in place for Estonian assets. And then is it an idea that it will be Estonian assets first and then other assets added as we come on stream?
We will start with Estonian assets most probably, exactly, because the transfer of assets is not clear right now. So, but it's enough for us for let's say for the first issuance. So it is, and then since Estonia is ready, Latvia is planning, I think, at the next summer next year. Lithuania this year, so I know, of course, also our treasuries in Estonia, but so that's, yes, it will be Estonia with Estonian-backed assets, most probably as the first issuance, and yeah, hopefully at the end of this year. Critical path, law, and the internal work, what I just mentioned before, it's pretty much of what we need to do as well.
Thank you. That's a nice positive note to end it on. And as I say, from a personal perspective, working in all three countries, that's a very nice positive message. We like that. It's very enjoyable working on this process and seeing the cooperation up front. We're now going to go to a coffee break. Before the coffee, though, please join me in thanking my panel.